Hey guys, happy January. I can't believe it is 2025 already. And you guys are here to get a interest rate update. And also, because it's January, a bunch of the economists at very fancy companies, which I'll show you guys in a second, this is when they place their forecast on where they think interest rates are going to end by the end of this year. So I'm not only going to show you what's been going on with the rate market over the last 30 days, but I'm also going to bring to you what the forecast says. And if you're thinking about buying or selling or renting or any of that in any state, literally that is what we're here for. I know a lot of times people think that when you go to a lender, you have to get your credit pulled and fill out this online interrogation form. But that's not how we roll here. We typically start with a consultation. We call it the planning consult. And we're just in a discovery phase. We want to have a conversation, learn more about you. I always say the three F's: your fears, your FICO, and your finances. And we can do all of that, whether you're looking to buy and sell within 2 years or 3 years or in 2 or 3 weeks. So just know that we're never going to push you to that. And my objective of being in this business is to sincerely help every single family I can make a good decision when it comes to your home and your finances. Because if you go to my website and you read my story, you'll hear how my dad lost the house when we were in high school. And it is why it's my mission to help everybody be in a better financial spot. So let's get to it, right? Let's see what's been going on with this interest rate market. Let me share my screen for you guys. Share screen. Here we go. All right, I'm going to jump through a couple different things. So the first thing I'm going to do is show you, of course, the bond market. If you guys have been tuning in, you guys know that we follow the mortgage-backed securities, also called the mortgage bond market. As the value of those mortgage bonds go up and down is how interest rates on fixed rate mortgages adjust. So it's not what the feds are doing with the federal funds rate. That's a totally different rate. But here's what I want you to see. Here's where we are early January. And what we have seen basically since mid-December is the slope of this line going down. Basically, it went down until December 19th, and then we've been somewhat mellow right here. And remember, there's an inverse relationship between the value of bonds and mortgage rates themselves. So what the heck does that mean? That means that when the demand for mortgage bonds are going down, it means the value of the bond itself is going down. So if the value here was $100, it might be $95, $90. Think of it kind of like a stock in the stock market. As the value goes down, that's not good for us. It means interest rates themselves are going up. But what we can see is basically after the election, it was very mellow. And then we saw the trend going up and we got really excited because interest rates started to move down a little bit. But now here they've gone up and they've mellowed out a little bit here. Here's the most important thing I want you to know. Mortgage rates move every single day. And throughout the day, they sometimes move more. Like this candlestick is longer on the 18th than this little baby tiny one. So they not only can move every day, but they can move throughout the day. And your interest rate is not locked with a lender until they tell you it's locked. So if you go through the pre-qual or the pre-approval process and you see an interest rate on the letter, that doesn't mean that that's your rate. It just means that's the rate they used for your approval. So until it's locked in, literally the rates are moving every single day, which is also why in the news you hear rates are up, rates are down, rates are up, rates are down. It's a roller coaster, but it's always compared to what? Compared to yesterday or last year or so what I like to do is show you guys some data. So the first thing I want to do is show you what's been going on from a number standpoint, because this is it in a line. But let's take a look at from November 7th up to where we are now. Basically, we saw rates go from 6.79. This is 30-year conventional, by the way. 6.79, you could see that they moved a little bit. If we come into the new year, 6.72, 6.85, 6.91. You'll also see the 15-year here. So that's kind of the story behind the snapshot of where rates are. This is a national average, so it takes into account best case scenario, down payment, FICO score, all that stuff. Once you work with us and you go under a contract, we will shop over 30 banks for you. We'll show you behind the curtain, the rate board, all of your options, all the things. But gives you a good idea of where they're trending. I do want you to know that on my website and on my Instagram. So if you come to my Instagram page, I always have this rate button here that's going to give you up-to-date rate information. I update this every single week. Or if you're not a grammer, you can go to my website themortgagenerd.com. You'll click on view rates here, and you'll always be able to see a market update and the monthly update here. So again, it's going to be an average, a snapshot in time. So, but at least it gives you accurate information, because almost anything that you see online is what I call clickbait advertising. It's going to give you an interest rate that might appear really low, that might have a lot of costs involved. So you always want to be careful with what you're looking at online. Here's the other thing I want to tell you is, where are interest rates forecasted to go? That's our other big topic. And so many people want to know, and I'm going to tell you guys. I'm going to show you where they're forecasted. But before I get into that, I want to be super clear that y'all know that yes, we're licensed all across the US. And no matter what the average interest rate is today, we have loan programs that can get you up to 2 percentage points lower than what I just showed you as the average. Well, what the heck is that, Denise? Why didn't you tell us that? Well, it's because it's a strategy that involves me and your real estate agent as you're making the offer, because I don't want you to pay to get the lower rate. I want the seller to pay for it. But that's why when you work with us, it's really important that we're involved and that you're working with a real estate agent that knows these strategies, because what I have been seeing is that some of these realtors or lenders have only been in the business for, a few years, and they're just not aware of these strategies, because basically for the last decade, rates have been so low that we hadn't talked about a lot of these programs. And so if you were around before interest rates were in the high twos and low threes, we talked about these loan programs all the time, and they're really popular, and the seller pays for it. And it's a great benefit for you. You can get closing costs covered. You can get a lower payment. You can get a lower rate. There's a lot of different ways that we can put the Rubik's Cube together, but you need to be working with a strategist. So let's get to what you guys want to see, which is the forecast. And I'm going to talk you through it. This is really weird doing on my computer. All right. So here is the forecast. So basically, the chief economist at the very popular Freddie Mac and Fannie Mae, they're the ones that lend the money to the banks for conventional financing. You have the economist at Redfin, Goldman Sachs. MBA stands for Mortgage Banker Association, National Association of Realtors, and Zillow. What they do is, this time of year, they forecast the following year's interest rates projections based on economic data, GDP, inflation, all that good stuff. Like, they get paid a ton of money to get this right. So what I want to do is not just show you 2025 down here. I wanted to see, okay, well, how was their forecasting in the prior years, and who's right more than they're wrong? So you'll see here that you got the year here, you got what the actual rate was for that year. Of course, 2025 is TBD. And then I've got all the economists lined up so we can figure out who is the best forecaster. And so you can see all throughout the years, this column over here is the winner column. So Redfin got closest in 19, 21, 23, and 24. So 4 of the last 6, Redfin was pretty accurate. And so if we come here to the Redfin column, what are they forecasting 2025? A 6.45% by the end of 2025, which is not substantially lower than where we are now. We are in the high 6s, low 7s right now. So if you were sitting on the sideline and you were like, I'm going to wait until rates get to X number, right? Because a lot of you guys did that. And I'm going to show you guys in a second what that meant. But maybe you said to yourself, I'm going to wait until rates get into the 5s or to the 4s, or it's not likely that we're going to get there in 2025. So now we have to start thinking about, well, what is the opportunity cost of me waiting? And if you're currently in a home, this message is a little bit different. All of our messages are tailored to each individual family and financial situation. If you're in a current home and you have a low interest rate and the home works, you're just bored, you might want to stay put. Now, if you're outgrowing the home and it's driving you nuts, or the neighborhood's driving you nuts, or it's too much home and you want to downgrade, we can utilize one of our lower rate programs to get you into a really attractive home so that you can be happy. But if you are a renter and you've been sitting on the sidelines and you're potentially paying rent, or you're delaying the equity that you could be building, let me show you with data what happened to people who said, I'm going to wait. And I'm going to do this because I literally just had this scenario pulled up. So I was researching, because part of our services is we monitor your finances and your mortgage even after your closing. And so it was an annual anniversary review for this client who lives here. You can see that they sold on January 3rd. So our client bought this home on January 3rd of last year. Here's the cool part of the story. Interest rates were 6.99%. They had a decision to make. Should I wait until rates come down or should I go ahead and buy this home? They decided to buy. And at that time, this house went under contract for $924,000. What is it worth just 12 months later? Y'all see that? So they could have waited. And if they waited, and if this house came on the market today, they would have had to bring a lot more to closing or pay a lot more for the home because homes appreciate in value. Now let's look at this financially. Let me hide some of the screen so it's not overwhelming. January, they paid $924. Don't necessarily pay too much attention. This particular client put 20% down, but you can put as little as 5% down if you want. It's all based on your scenarios, but this was an annual review. So this time last year, they paid $924, 6.99% rate. This was their payment with taxes and insurance. Now let's look at this. Today, the exact same home, same square footage, bedrooms, bathrooms, now costs $941. Same rates, but had they waited, their monthly payment would have been $120 more a month. And they were paying $2,200 in rent. So not only are they going to pay more for the exact same home, but they also would have paid, what is that, $24,000, $26,000 in rent for another year, all because they were hoping that rates were going to come down. And keep in mind, Redfin is estimating an interest rate at 6.4. So here's the better strategy. This person who got into the home at 924, the price you pay is permanent. The interest rate is temporary. Part of our services is we add you to our rate watch list, and we're monitoring the interest rates for you and your insurance and your taxes and all that stuff. Because when interest rates come down, we have a zero out-of-pocket rate redo program. So now look at this. Let's just say it takes 2 or 3 years for the rates to come to this 5.25%. Well, they didn't pay this price tag and they didn't wait. So now that same home at the 5.125 rate, look at this. The monthly payment is almost $900 cheaper. And that is what I think most people get spooked about when it comes to buying a home in this market is, well, should I wait? We get scared. That's a scary question to answer. It's a lot easier to answer if we can run this analysis for you. And by the way, sometimes the analysis says you should wait, right? Like I'm going to be unbiased and tell you the good and the bad of each decision. But especially if you're renting, here's what I know. We still have a major shortage of homes available based on the demand for people entering the market. Part of that's just because there's a lot more Gen Xers and Gen Yers and those generation groups than there were in the prior generation. And because of the housing market crash in 2008, home builders stopped building. And so if you look at the 2017 map of basically home builders not building enough homes to keep up with inventory. And now you've got all of these people who in that 10-year time period where rates were in the high 2s and low 3s, they don't want to sell their house. They're more than ever thinking, maybe we should rent this house out and keep it to help with our retirement, which is a great strategy. We can talk about that too. I've done it with every home I bought. So now those homes aren't entering the market as pre-existing homes for clients to buy. So we are in an inventory shortage. That is why even when interest rates were at an all-time high, in 12 months, y'all saw how much that home increased in value. That was just 12 months. So again, I'm going to always bring you guys the facts. I do these market updates so that you can stay informed. Please do not fall for any online crap, clickbait, interest rates, fear mongering. Like I am your nerd. I'm going to show you the good, bad, and the ugly. If you have any questions, get our number. You can text or call us 972-544-4480. All I want to do is help you make a good decision for you and your family, because here's what I do know is that the people who are the wealthiest in this world, they got wealthy by owning real estate. And unfortunately, in our schools and sometimes in our community, we're taught go to school, get a good job, work 9 to 5, and like save our way to retirement. But y'all, that's becoming harder than ever with inflation and just the cost of goods going up and all that good stuff. So if you can make an extra 15 grand a year, not because your boss gave you a promotion, but because you own an asset that's appreciating in value, you're going to be able to retire sooner as long as you play your cards right. So, anyways, thanks for tuning in. If you're on my website, then stay tuned next month. If you're somewhere else, I'm thankful that you tuned in. If you need anything from me, let me know.